we're not going to be worried about how do I know which fib's going to be hit. I just want to show you what the Fibonacci retracement tool is and how do you draw it onto an impulse leg. All right. Now, here's the key. We talked about potential reversal zones and how can we add the Fibonacci tool? How can we use that in our actual trading? Well, we can start to narrow down a potential reversal zone and predict what Fibonacci level the market is going to come to by adding that to our previous level of structure. So we talked about it before. Whenever we get an outside return, our outside returns usually come right into an area of previous structure, right? We have our impulse leg here. We have our outside return. Remember, this is our initial structure low. We get our next impulse leg, swing high to swing low. Where do we expect our outside return to come to? Our previous structure level. How can we narrow, yep, previous structure, you guys are clocking with me. How can we narrow this down? Well, we take our Fibonacci retracement tool. We go from the highest high of our impulse leg to the lowest low, and we measure up an area between the closest Fibonacci, in this case it's going to be the 618, or if I bring in my minor one, come on now, my 50%, we create a zone between our structure level looking left and our closest Fibonacci level. And that's how we can start to make a prediction of which Fibonacci is most likely to be hit, and we can start making a potential reversal zone for where the market's likely to come into and then reverse off of. Oh yeah, and I'll show other examples. Let's take our next leg. So again, what do we have here? Our impulse leg, swing high to swing low. We know that here's our previous structure low. Pre-PS, that's a word. Previous structure low. We know that our previous structure low also means it's a previous level of structure, and the market is most likely to come back and retest that level as we get that outside return. So next step, we have the first area of our prediction right here. We have our structure level drawn out. We take our Fibonacci retracement tool. We go from the highest high of our impulse leg down to our lowest low. In this case, again, we can bring in our minor Fibonacci level, our 50%, and we can draw out a zone between our 50% and our structure level and predict that this is the area where price action is most likely to reverse. Now again, I don't want you to worry about trading yet. There's steps to that. You don't just trade it every time on an aggressive limit order. You'll get eaten alive that way. The key is we're narrowing down how to make predictions of where the market is most likely to reverse at. Again, the key in our trading is we want to create we want to find the high probability trading opportunities. So the more filters we can add to our trading, again, not just using structure, but now using structure and Fibonacci, the more filters we can add, it raises that probability level that we're in a good trading opportunity. Okay? Let's scroll to do another example. Let's find an upward move. It looks like you guys are following me on this. All right, let's take this move right here. Zoomed in too much there. All right. We have our impulse leg right here. Swing low to swing high. We have our previous area of structure right here. Again, this case is going to be a zone. Previous area of structure right here.